this is the hard part. It's the same with any technology company. Is it going to get adoption? So this whole world is all about Metcalfe's law. Now, there's no easy Metcalfe's law, just plug it into my computer and it gives me a fair value, right? So you have to estimate it. And you're estimating it by looking at, is the network growing? Are people building things on it? So you make some forecast based on that. So like you'll see tokens like Shiba Inu that retail are trading. And you have to ask yourself, is that really a network or is that just a speculation? Now, in most cases like that, it's just speculation. That's fine. People want to speculate, do what they want, but you're not going to build long-lasting value. So over time, they trend to zero. But what's interesting was the other one like that was Dogecoin, which was this joke crypto that everybody found as a meme, and they liked it. It was kind of fun, and it's kind of a bit weird. But a lot of people invested in it. And so this was looking like it was a potential disaster in the making. But then Mark Cuban, a famous US investor who owns the Dallas Mavericks, which is a Dallas basketball team that's pretty famous, and he's a very famous guy. He said, you know what? If you guys all own it, we're just going to accept it as payments for anything to do with the Dallas Mavs. And then Elon Musk said, well, if you guys love this, we're going to use it too. So I think Tesla's going to end up using it. And so now what you're creating is the applications layer. So you don't always know. So you need to be aware. Ethereum, very straightforward. Everything's happening there.
Yeah.
The network's growing, applications layer. So, okay, so how does the average person figure out if this is working? And there's an easy hack.
On November 10th, 2021, Bitcoin, the most well-known cryptocurrency in the world, hit an all-time high of $68,789 per coin. Since then, Bitcoin's volatility has been remarkable, and the market has seemed reactive and unstable, with the Fear and Greed Index showing a high level of doubt and uncertainty. Bitcoin's price has fluctuated between $35,000 and $45,000 since January 5th. Considering the present geopolitical climate, growing inflation, interest rate hikes, and rising energy prices, many industry professionals are already speculating about where the price of Bitcoin will be by the end of 2022, as many people seek out a hedge against inflation and a safe haven asset. Hello and welcome to Money Talks. In today's video, Real Vision CEO and macro investor Raoul talks about things happening with Bitcoin, Ethereum, and other altcoins. He addresses the issue of Bitcoin regulation as well as volatility. And most importantly, Raoul answers whether you should buy the Bitcoin dip or sell in the current scenario. At the end of this video, Raoul also makes a short-term price prediction for the crypto markets. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
As you know, being a trader, it's all about position sizing.
Yeah.
And it's all about risk appetite. If you are 30 years old and you have some savings and you want to take risk because you don't have as much as you'd like for the future, but you've got a good job, go ahead, take the risk. Make a calculated, thoughtful risk, not just buying an option and hoping a stock goes up. But if this is your thesis that cryptocurrencies are going to go from $2 trillion to $200 trillion, which is my thesis, I think it's the biggest opportunity I've ever seen. And it's going to be the largest wealth accumulation in all history in the shortest period of time. The network adoption currently for crypto is growing twice the speed the internet did with the same number of users. So back in 1998, the internet was growing at 63% a year, had about 500 million users. Crypto has about 500 million users now. It's growing at 113% a year, which means it gets to 1 billion people by next year or the year after. Yeah.
So sorry to interrupt in the middle, when you say users, I mean, we are talking about users of crypto as a technology, or we are saying the crypto investors?
They're all the same thing. Remember, the network is both the user and the application
All right.
and the investor, right? It's all the same thing, which is why people struggle. It's a speculative asset. It's not. It's the future of finance. Yes, it's all of those things.
Right.
We're seeing US, we're seeing everybody moving into this arena. So, should we be a buyer of the dips or a seller of the rallies? If we are in a secular trend that is exponential in nature, then a 50% drawdown is a hell of an opportunity. And you can either be slightly risk averse, in which case you put a small portion of your portfolio, because this is a 70% volatility asset.
Yeah.
So fine, then put 3%, 5% of your portfolio and treat it like an option. It's not going to go to zero, particularly if it's a big one like Ethereum. So maybe it falls another 50%. So can you lose 2.5% of your portfolio? Fine, that's not a problem. But if you're young and you're into technology and you want to take a bet on the future and you've got a steady job and you can afford to take a bet, go for it. Don't do that if you're 70 years old, because you need your money for retirement. But we're all allowed to take a few bets in our life, and for one or two of them to go wrong. We talked about that at the beginning of the interview. That's okay, but that's not wild speculation. That's thoughtful process building, framework building. Build your investment case, look for confirmation, and then do it. Step back from the noise. Anybody can create a coin. Like anybody can create a startup and say, I'm the new fintech solution for India.
Yeah.
99% aren't worth anything.
Okay.
But some are. Okay. So this is like VC investing, but you've got big products like Ethereum, which is now like investing in Google 20 years ago, right?
Yeah.
So why are these other tokens? It's straightforward. Bitcoin is incredibly secure in how it's constructed, which is this proof of work. You have to solve the algorithm to mine Bitcoin, and you're protecting the network, and it's slow. And it's not very good to use for high input things. Now, people are building layers on top that do that, but basically the world's moved on quite fast. But it's incredibly secure, and there's never can be more than 21 million. It's a very understandable, unique thing. But it's a bit slow for some applications. Ethereum, incredibly adaptable. It's an applications layer tool that you can build on. So fantastic. Problem is the network is so in demand that the fees of using the network are high.
All right.
So, and also it's still not fast enough for some of the really crazy fast payment systems we need. If we think of the Internet of Things, where all of the everything digital around us is streaming stuff, we will have streaming payments. Ethereum cannot handle that. So most of these other what called layer one chains solve one of two things. They're either faster or they're cheaper. But they all come with a trade-off, which is they're more centralized, so they're less secure.
All right.
So that's basically all of those are solving different things. So then again, we look at them and saying, well, who's using these? What's growing? So we saw a lot of developers building on top of Solana. We're seeing interesting network growth in Terra Luna and AVAX. Those are the three that we've seen. Now, will that last? Because Ethereum's about to go through some changes that should make the network cheaper to use and maybe faster. So do we need these other ones? We don't know, but this is these are the bets we can make, is one thing versus another, much like we would in the equity market by saying, we think this company is going to outperform that company. If you put property on a blockchain, it's all confirmed, all the legal contract, it's essentially notarized by every participant on the chain. So it means that we have trust. And a digital world where everything moves so fast, we need trusted things. We don't want to go to the notary every time and then get 3 lawyers involved and then go to the bank. We want it all to be trusted instantaneously, which is kind of like India's stack, right? So now you can do your KYC instantaneously. Well, imagine if the whole world does that on blockchain, then everything is interoperable. We can do this all together. And NFTs are unleashing all sorts of things we don't know. Just think of every contract. So insurance will go onto NFTs because you have these new, and then we can sell insurance and buy insurance and trade insurance, all sorts of things. It's like the derivative market's clearly going to go onto blockchain because it's a much better way of keeping track of who owns what and all of these things. And same with the credit markets as well. So go back to the charting, my technical analysis. All of these assets, these digital assets, Metcalfe's law is exponential in nature. So it means when you draw a linear chart, it always looks like this.
Yeah, yeah.
Most people go, it's a bubble. It's an endless thing. It's a bubble. It's a bubble. And you would have done the same with Reliance. You would have done the same with Google, Facebook, Tesla, all of these. And you would have got them wrong every time because these were network stocks. So what you do to value a network stock is change the scale on your chart to log scale.
Okay.
And then what happens is magic. Most of them end up being in this beautiful channel.
Right.
And they go up and down in the channel. That channel can be 50% because it's log scale.
Yeah.
But the channel essentially shows you network adoption.
Okay.
Some analysts have increased their price targets for Bitcoin, while others remain cautious because of ongoing macroeconomic and geopolitical risks. Although, Bitcoin will need to stay above the decisive break of $40,000, which is a psychological barrier to trigger an increase in buying activity. So far, volatility hasn't been particularly high, taking into account a barrage of largely negative news over the past few days and China's Shenzhen province going into lockdown. Generally, the narrative of Bitcoin as a safe haven and store of value has been consistent across some analyst commentary despite the recent decline in a risk-off environment, similar to what occurred in 2018 and 2020. Despite short-term stabilization, Bitcoin's market capitalization relative to the total crypto market cap remains elevated this year. Typically, BTC outperforms in a down market because of its lower risk profile relative to altcoins. So what are your thoughts? Should everyone be buying the Bitcoin dip or selling at this time? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.